So we are going to continue on in our journey learning about stocks because we've kind of learned what the heck a stock is. We've learned where money comes from when you buy a stock. We've learned when the best time to buy a stock is, which is when the price is low, and the best time to sell is when the price is high. So now we need to talk about the actual process of doing that, of buying a stock. So when you go out to buy a stock, there's actually 4 different steps that you'll go through. You, as the investor, are first going to contact what's called a stockbroker. Then the stockbroker is going to go to what's called a specialist, and then the specialist is going to go to what's called a floor broker. And then it goes backwards through the line. So the floor broker would go back to the specialist back to the stockbroker, and then the stockbroker back to you. Now, it is important to note that you could be all of these people if you want to. So you could be doing all of these roles by yourself online, or people like the stockbroker could be the specialist and the floor broker. So sometimes each of these positions are actually the same person. Sometimes they can be separate people. So let's break this down in terms of what the heck these mean, because you're probably like, Goose, you just told me that it goes through this process and I don't know what they mean. So first of all, before we even go through those 3 different people, we need to talk about the exchange. So if you remember from the last section, the exchange or the stock exchange is the actual location where stocks are bought or sold. So this can be done in person, like at the New York Stock Exchange or at the NASDAQ, or your exchange could be done online. I personally go and I do all of my trading online, and I know my stockbroker does trading online, but that's not to say that you couldn't do this in person. So now let's go through those 4 different steps on that flow chart of the accounts. You as the investor are going to start by going to what's called a stockbroker. Now, a stockbroker is a person that helps you decide what you want to buy and when you want to buy, or when you want to sell, or what you want to sell. They'll also take your actual order. Think of them as when you go through a drive-through, they're the person on the headset. So the stockbroker could be your financial advisor. It could be a person at a bank. It could be you. You could be your own stockbroker if you're doing that online, which is what we'll practice when we play our stockbroker game. Remember that you want to find a broker or an advisor who has the heart of a teacher and who's willing to explain to you. You can go out to Google. You can do a simple search for different financial advisors or investment bankers. Those are the same as stockbrokers. Some popular ones I might recommend would be Charles Schwab, Edward Jones. I know Wells Fargo has advisors. I think Rochester has an RBM Wealth Management, but you can definitely go out and do some research to find a good financial advisor who will also have the capability to be your own stockbroker. Then the stockbroker is going to take that order and they're going to give that order to the specialist. The specialist is the person who enters the order into the computer and creates a ticket. So if the stockbroker has taken your order, the specialist is the one who writes it down and puts it in electronically. Again, the stockbroker and the specialist could be the same person, and all 3 of these people could be you if you wanted it to be, or they could all be separate people. Finally, the specialist would take your computer ticket order and they'd bring that to the floor broker. Now, the floor broker is the person who's actually standing on the floor of the stock exchange, and they'll go over to the specific company's trading kiosk and take that ticket and they'll submit it to that kiosk. So this could be, again, all you if you're doing it online, because you wouldn't actually have to go to the floor of the stock exchange, or this could be all different people. Let's take a look at what this actually looks like in real life at the stock exchange.
Welcome. I'm Ted Weisberg, and I want to welcome you to the New York floor of the New York Stock Exchange, and I'm going to take you on a tour of the exchange. We're in what we call the main room, and you need to look at this beautiful ceiling because this is a spectacular room that has been here as long as the exchange has been here, which is well over 100 years. The specialists are at the kiosks that we see around us, trading different stocks, and the brokers communicating with their clients are lined all around the room. So now what I do as a broker, my responsibility is to represent my clients on the trading floor. I guess I should bid 95, right? Buying the stock as cheaply as I can or selling it as dearly as I can. And I call the client the dog. The dog can live in London. The dog can live in San Francisco. The dog is the decision maker. All I'm doing is implementing that process. So we just got an order. And so what I'm going to do is I'm going to enter this order, trades right here electronically, and then we'll go over and see what the stock looks like. See, we're going to go to where this particular stock trades. So it trades at post 4 section S. So we walk around post 4. This is all Goldman Sachs, Spear Leads. They're the dealers in all these stocks. The stock is GGP. GGP, can you tell me how GGP is?
GGP is 30,000 offered at 21 cents right now.
Right.
Let's give you a name up now.
Thank you very much. A broker, of course, has his orders, but he's always looking up to get a sense of what the market is doing, reading the headlines, looking at what oil's doing, look at what gold is doing, looking at what the Dow is doing, looking at the currencies, and I guess if he needs to know, looking at what time it is around the world. Well, when I come to work every day, this is exactly where I come. This is Seaport Securities' location on the trading floor. My clerk, Lewis, is here, and Lewis, come say hello. And we actually are on the trading floor about 8 or 8:15 every morning. Lewis is here, and I think a lot of money changes hands, a lot of money. Is it gambling? I guess it's all in the eyes of the beholder. Certainly there is a huge risk element to it, so if there's risk, I guess it's fair to say it is a form of gambling. I don't choose to see it that way. If I want to gamble, I go to Las Vegas. And now, to continue our tour, this is the podium where they ring the bell, and at 4 o'clock they ring a bell, and trading ends. Somebody presses a button, the bell goes off, a hammer down, like at the docket, and it's over. And it happens at exactly 4 o'clock every day, and it's never changed. And luckily in these bad markets, I'm glad it's over at 4 o'clock, because if by 4 o'clock you've had enough, you just want to go home.
So in that video, he acted as both the stockbroker and the floor broker. You saw he was getting the order from his client. He got that on his little iPad. Then he went over to the trading kiosk where the specialist was sitting. He asked them about it. He could type in the order, the specialist, and then he was on the floor. He took that order, and then he was able to go connect back with his investor and say, yes, I bought you this, or yes, I sold you this. Again, this could be you, all done online. And so I want to show you what that looks like on my end of things, where I have acted as Harper's stockbroker, specialist, and floor broker. So we use TD Ameritrade online, and Harper's grandparents got her a gift of a Berkshire Hathaway stock, and that is a very, very good stock. It's owned by Warren Buffett. If you know anything about him, he's a pretty famous investor. But what we did to buy this is we signed up for a TD Ameritrade account for Harper. Once we were signed up for an account, we could enter in our own orders just like the specialists would do. So this says Snap Ticket. I would go in and I'd look for a quote for the company. So like I said, we were looking to buy her Berkshire Hathaway. That's what her grandparents requested. So we had to go out and find the Berkshire Hathaway stock. Now, this is BRKA for their ticker symbol. Notice that one share is $312,000. Well, we did not have that much money, but Berkshire Hathaway trades at different price points. So there's actually a Berkshire Hathaway price point B, which was a little less. So I do Berk.B and I bring up the quote, and this tells me, okay, I could go out and I could buy one share of Berkshire Hathaway B for $208.17. And at the time we were like, yep, we're going to buy Harper 1. Our action here is buy. If we wanted to, we could be selling stock that she owned. Then we're able to decide how many. Do I want to buy 3 shares? Do I want to buy 2? Do I want to buy 1? Whatever. There are different types of orders. There's a limit order that we're going to look at in just a second. And that is something that I would recommend using. But if I just wanted to buy this right away, I'd do the market order, because I'm saying, yep, I'm going to do this. I'm going to buy it. Great. And then I'd be able to review my order, and then I'd be able to place it. And it would go through all electronically. I've just acted both as her broker. I then put it in the order as the specialist, and I'm sending this electronically to the floor. And then it's going to come back and it's going to tell me if I own it or if I don't. So that's me acting as all four roles. I'm the investor, I'm the broker, I'm the specialist, and I'm the floor broker, and I'm doing it all online. So I know I just mentioned limit orders. Let's take a look at what those limit orders are, because that's definitely a thing that I would recommend using, especially if you are going to act in all of those roles when you're trading stock.
A limit order is a specific instruction that an investor gives to a broker describing how a specific trade is to be executed. When purchasing a stock, a limit order will set the maximum price an investor is willing to pay for the stock. When selling a stock, the limit order will set the minimum price the investor is willing to accept. Jim wants to buy shares of Al's Ice Cream. Al's is currently trading in the market at $25 per share. Jim doesn't want to pay the market price of $25 because he thinks it's a bit too high. Instead, Jim sets a limit order to buy at $20. This tells Jim's broker that he's not willing to pay any more than $20 per share for shares in Al's Ice Cream. Once the stock falls to $20 or less, the broker buys the shares for Jim. If Al's doesn't drop below $20, no shares are purchased. Jim can also use a limit order to sell his shares. If he wants to sell Al's at $30, but the current price is $25, he can enter a limit order to sell at $30. This sets the minimum price Jim will accept for the stock. His shares will only sell once the stock price hits $30 or higher. Otherwise, he will continue to hold shares in Al's. Limit orders help investors control the prices at which they buy and sell stocks.
So in review, the limit order limits you to buy stock at a certain maximum price you would set, or it would limit you to sell your stock at a minimum price. So it lets you go in and build discipline so that you can buy and sell at the right time. So you can say, okay, this is the highest amount I ever want to pay, and you can drop that in, and you can be like, this is the lowest amount I would ever want to sell it for, and you can drop that in. And so it's a great way where you don't have to sit and watch the stock minute by minute, but the computer will do it for you. So let's take a look at what this looks like if I was doing this in the real world. So let's say I want to go out, I want to buy stock for Harper in Amazon because I think it's a great company to invest in. If I am looking at Amazon right now, it's up. And so I don't necessarily want to go out and buy it right now because it's up, and I want to buy it when it's low. So maybe what I do is I look at what's Amazon done in the last year. I see it's pretty high right now, but I'm like, okay, this is, before Corona. Let's just look at how low it got here. So it was about $29.54.91 in this, past couple months. So maybe I say that's the price I'm willing to pay. If Amazon ever would drop as low as $2,955, I'm willing to spend that much and buy Amazon stock for Harper. So when I'm filling out this order ticket, I'm saying I'm going to buy it. Let's say I would buy one share for her, and I've got to say what. So Amazon, and I'm setting a limit. And so I'm saying I'm limiting myself, and I'm only going to buy it if it hits the price of $2,955. Now this time in, or this order good for, says day. So right now, this TD Ameritrade would only go out and they'd look for Amazon just today. And if Amazon today hit 2,955, or let's say Amazon today hit 2,000, it would all of a sudden buy me one share. Well, I don't want to have to recreate this every single day. So you can have this last for as long as you want by changing your amounts here. In our stock game, you can say good until cancel. So it would just sit out there forever until it actually happens. And then I'd review for the order. So this would say that whenever Amazon stock hits the price of $2,955, it will buy it for me. Now you could do this the opposite way. So maybe I owned Amazon stock and I want to sell it. And remember, I want to sell when it's high. So if I'm looking at my graph and I'm like, okay, here's one of the highest price points of Amazon in the last couple of months, $3,531. So maybe I own one share of Amazon and I say, I'm going to sell that one share if it hits $3,532. And again, I would change my time so that it is good till cancel. That means it sits out forever. You can set a cancel type. So this is saying, okay, I'll look until February 26th of 2021, or I could put in 20 years from now if I really wanted to. And it would sell my one share of Amazon stock if it ever hit 3,532. Now, let's say Amazon stock all of a sudden jumped up to $5,000. Boom, that would kick in and it would do the same thing. So it doesn't have to be exactly that amount. It can be any price on or above that amount, it would go through. So I really like limit orders because then I don't have to sit there and watch it second by second. I can go out, I can check the graph, and I could say, what's a reasonable low price that I would buy this stock at? And I can set a limit order to buy at that price. And then I can go out and see, hey, what's some of the highest prices it's been at? And I can set my limit order to sell at that price. So I really, really like limit orders because it creates that discipline and it helps me buy when it's a bear market and it helps me sell when it's a bull market.